Good afternoon, everyone. Welcome to this exciting session on dollar INR. And finally, Trump has met Putin. And even though the talks are not conclusive, there is a lot of hope in the future that this war might finally end. And what does that mean for dollar INR and the exporters and importers in India? Let's have a look. Okay. So, 10 days back, I had shared my thoughts how to hedge dollar risk for dollar importers. Okay, now today I want to share the thought, a similar thought but contrasting thought for dollar exporters. Okay, but before that, let's quickly have a look at the dollar INR chart. Remember, this is a 24-hour dollar INR chart, so there will not be any gaps. Okay, so this is the chart, and what we have seen a very quick rise here. Okay, and typically what happens is when rupee weakens like this, exporters want to hold on, expecting that the rupee might weaken further, but that typically does not happen. If you have a look here, it went higher, reached a level, and then came back quickly. Okay, and now when rupee has weakened, it has reached a similar resistance zone, something that I have covered multiple times in the last couple of weeks. So it has typically reached a resistance zone here. So at this level, what should dollar exporters do? Okay, for all dollar importers, please look at my video that I posted 10 days back. You will get a good amount of idea how to hedge, and this is for dollar exporters. Okay, so I want to emphasize on using options at such a time, because obviously the markets are very volatile. There is a lot of uncertainty. The talks have failed, but there is a lot of hope in the future that this will finally end. So it makes sense to get some kind of flexibility. Okay, so here in this table, it's a large table. You can invest your time looking at it. Okay, so here what we have done is we have compared three instruments, okay, hedging instruments. The first is the simple forward. The current spot is at 87.40, and we are looking at a 3-month maturity. Remember, for that importers video we covered a 2-month maturity, so slightly different. We are covering a 3-month maturity here. So the forward rate is around 87.7850. Okay, so around 38-39 paisa of 3-month dollar INR forward premium. And what we have done is, obviously there is a simple forward which is this red line. Okay, red colored area, a simple forward. And then we are looking at a vanilla option, and we are looking at a vanilla option at the same strike price as the forward rate. So it is a ATM option. Okay, so a vanilla option, if you are looking at a 3-month option, then you will have to pay a premium. You will have to pay a premium of about 77 paise. Okay, so 87.78 half is the forward rate. Vanilla option is also at 87.78 half, and you pay a 77 paise premium. So your minimum net rate is around 87.0150. So you will never get any rate less than 87.0150 in case of a vanilla option. Okay, so this is the payoff for a forward rate, obviously straight line. This is the payoff for a vanilla option. The third instrument that I want to emphasize here, something that has become extremely popular in the last 4-5 months, is something what we call as a Seagull. Okay, a Seagull option. A Seagull option is a 3-leg option. For an exporter, you buy a put, and we buy a put at the forward rate. So you know it becomes comparable to a vanilla at the forward rate, and also forward contract, which is obviously in itself at a forward rate. So you have a Seagull in which the first leg is at the forward rate. So you buy put at 87.7850. Obviously you have to pay 77 paisa premium, but you offset that premium by selling a call at a higher level. That higher level is 88.30, and then you are selling a put also at a lower level, which is 86.30. Okay, so you sell a call at a higher level, then you sell a put at a lower level. So by selling these two options, you receive 77 paisa. So the premium that you have paid, you have received the same amount of premium, and it becomes a zero cost. That is why if you see, the net cost becomes 0. Okay, so now in a Seagull, I have done 3 options. How does it look like? Okay, now what I have done is, I have taken a chart where I have plotted all the 3 together. Okay, so if you see the red line, which is very simple to understand, the red line is the forward rate, irrespective of wherever the spot goes, whether it goes to 89 or it goes to 84, 85, your forward rate remains the same. The blue line is the vanilla option. Okay, see at 87, 78 half onwards, you can get upside participation. If rupee weakens beyond the forward rate, then you don't exercise the option, you typically get the market rate. So your upside is completely open. It goes to 89, it goes to 90. You can get those levels. You can participate in that rupee weakness if you're doing a vanilla option. A seagull, if you see, is the green line. Okay. So remember, you sold a call at 88.30. So your gains are capped at 88.30. So if you feel that rupee might weaken, but it might not weaken beyond 88.30, then seagull you can get the participation till 88.30. And in seagull, the other risk is the level below 86.30. Okay. So if rupee gains beyond 86.30, then there might be a risk. But here also the risk is taken care of, because you are buying a put and selling a put. That difference of about 1 rupee 48 paisa, that is the benefit. If rupee gains below 86.30, then you get that market rate plus 1 rupee 48 paisa. Okay. So slightly confusing, but a very, very good structure. You know, if rupee gains substantially, okay, that is the only place where you will typically have a bit of a risk. The seagull buyers will have a bit of a risk. Vanilla will do much better there. Okay. So if your view is that rupee is not going to weaken too much and rupee is not going to gain too much, then doing a seagull is a very, very good option structure. And that is one of the reasons why we have seen in the recent past, when rupee is, you know, in a broad range of 3 to 4 rupees, in that broad range seagull works very well. It will not work well if there are extreme movements, either extreme rupee weakening or extreme rupee gaining. In these kind of extreme movements, seagull will not work well, but that has not happened in the last year or so. The broad range has held. So, and that is one of the reasons why seagulls have become popular, because the broad ranges have held and seagull will work very well in these kind of broad ranges. Okay. So, options are a universe and you can structure it and customize it for your specific requirements, and that is why options are so popular globally. And it is time that Indian exporters and importers also embrace it and use it in their forex risk management strategy. Okay. So, that is it from my side. If you want more such insights on foreign exchange markets, please scan this QR code and join our WhatsApp community.